or what you and I might call Fed Day. We got to have a conversation about the Fed because it is not the 75 basis point raise that we are interested. We are interested in the speech or the conference after the decision, and we are interested in the Q&A. I believe there are 4 options. I believe Jerome Powell in that press conference can choose one of 4 things. What I would love to hear from you after I describe all 4 is let me know in the comments below which one do you think they will do. Obviously, we will know in 4 or 5 short hours, right? Because it'll happen this morning Pacific time. But let's talk about the decisions because the Fed decision at 11:30 Pacific will be market moving. So number one decision. And if you watch my channel, you know that this is the one I hope they do. It's not the one I think they do. It's the one I hope they do. Number 1, we get Jackson Hole Powell 2.0. Basically, Powell comes out with a very short and succinct, speech, answers any and all questions about basically saying inflation too high, we're going higher. Inflation too high, we're going higher. He gives no pause, no hint of a slowdown. If you look at the numbers of what Wall Street is expecting, that is not the option that Wall Street wants. Wall Street wants the Fed to slow down. So number 2, you could get Powell saying something like, we have made great progress. We can take a slightly more or slightly less aggressive approach. Basically, Powell says, Wall Street, Elizabeth Warren, Cathie Wood, here is your 50 basis points in December. So again, number 1 is Jackson Hole Powell. Number 2 is we have made great progress. We can take a more measured approach. That is number 2. Number 3, and if number 3 happens, I think Wall Street goes bananas. Number 3, he could say something like, we are seeing signs of economic slowdown. We are seeing signs of things slowing down. We must be careful. That could mean 25 or even a pause in December. And number 4 would be Jerome Powell saying something like, this 75 that we've just given you is a lot. We should step back and wait, which would be a clear pause. So again, I do believe we get 75 today. There is some people talking about a 50. I don't see it, but we shall see. So let me know in the comments below. Will we get Jackson Hole Powell basically saying we are going higher, faster, and we will stay there longer? Number 2, we have made great progress. We can take a more measured approach. Number 3, we see clear signs of a slowdown. We need to be careful. Or number 4, we're done for a while. Let me know in the comments below because I think the answer to that question tells us what happens to the stock market today. Because if we get number 1, pain. If we get number 3 or 4, hallelujah. Number 2, kind of what the market expects. So let me know what you think below. I'd love to hear from you. The Fed pause. So again, remember the Fed pivot was originally a cut. Then the Fed pivot became a pause. Then the Fed pivot became anything but 75. That's how redefining words, I guess, happens nowadays. So what does this mean for us? First, let's be really honest with each other. The Fed will eventually slow down. That is a truth. That is a fact. The question is when. Fair. But they will slow down. They won't raise 75 forever. 2, they will eventually pause. I do not believe this Jerome Powell, unless something really drastic breaks, will go from raising one meeting to cutting the next meeting. I believe there will be a pause. One could argue how long the pause. I think that is an interesting discussion. Could it be 1 to 3 months? Could it be 3 to 6? Will it be 12 months? My belief is the Fed and Powell wants it to be at least 12 months between the last raise and any cut. But I think that will eventually become a discussion in Q1 of next year. But we have to realize, in my opinion, the sooner we get to the terminal rate, which is a fancy way of saying the peak, the better off we will be. For whatever reason, Wall Street wants the Fed to go slower. If the Fed goes slower, my belief is they have to go higher. So today is an important day. Again, let me know in the comments below what you are thinking. ADP report. Now this report is something that comes out before the jobs number on Friday. It has historically not been very accurate. In fact, it was so not accurate, they stopped doing it for 2 months as they rejiggered the numbers. That said, it's our first look at October employment, and it came out hot, but in a very interesting way. One, it beat expectations. Expectations, I believe, were for 205,000 jobs created. It came in at 239,000 jobs created. Headline number, bad. Remember, we are in that odd world where good news is bad news and bad news is good news. So you and I would look at this saying that is good news. To the Fed, that is bad news. Second, when you look at the totality of the report, it highlighted wage inflation up 7.7%. The wage inflation spiral that I've been talking about for 6 or 9, maybe even 12 months now, appears to be picking up steam, in my opinion. Now, when you go into the headline number and go down 1, maybe 2 levels, you see some very interesting signs. You see some very, early signs that what the Fed is doing is working. So let me talk about that. So again, remember, 239,000 jobs created total. Of that, 210,000 was hospitality and leisure. Okay, that makes sense, right? Again, services, travel, all of these things going up. Where do we lose jobs? Construction, manufacturing, finance. Folks, if you've been watching my channel, you know that I believe we have real pain coming to the finance industry. You are going to see layoffs at Wall Street, at big banks. It's already started. More pain is coming. Layoffs in construction are coming. Layoffs in tech. I believe tech layoffs start in Q1. I believe this will be looked at in historical lens as a white-collar-led recession, not blue-collar. Last thing to say about leisure and hospitality is if you are in that industry, go get you a raise. Again, remember the headline number was 7.7. Leisure and hospitality was up 11.2%. 11.2%. So again, very interesting to see what is going on. Mortgage demand. Mortgage demand down 41% purchase year on year, down 85% year on year for refinances. The mortgage industry, Wells Fargo is talking about layoffs potentially in their mortgage business. Mortgage applications at Wells Fargo, folks, if you're ready for this, down 90%. You need a lot less people if your demand for work is down 90%. Yes, that is true. Earnings. Let's talk about some earnings. We got Airbnb yesterday after hours. They beat top line, beat bottom line, but their forecast disappointed. Also, they talked about cancellation rates being above 2019. but below 2020 and 2021. AMD gave weak guidance. They again had pre-announcements. They kind of got to their bad number, but they did give a very weak earning guidance. Match.com beat top and bottom and gave a strong guidance. Ferrari of all places, raised guidance, beat top line, beat bottom line. People are still buying expensive cars. My suspicion, it's only a suspicion, is they are burning off their order book. Lots of people were stimulus ballers, probably signed up to buy a Ferrari. It takes a long time to come. My guess is a lot of Ferraris are going to go up for sale as the stimulus ballers don't ball out anymore. And then lastly, another one, Estee Lauder, beat top line, beat bottom line, but gave very weak guidance on higher cost and a strong dollar or FX charges. So again, the Fed, we need to have an honest discussion. How high do they have to go? We know pain is coming. They told us pain was coming. But how high do they have to go? How soon do we want them to get there? Do we want them to get there in February? Or would you rather have less pain longer and have it be July or August? These are choices that I think we have to make. These are choices that, again, will make Jerome Powell and the Fed not the favorite people. Elizabeth Warren is going after Jerome Powell, basically saying, how many jobs are you going to kill? He is going to get more and more pressure like that from politicians. He told us pain was coming. We need to stop spending money, government of all kinds. Stop spending money. You're making the job harder. So again, how high, how fast, and then how long? This is the world we live in. These are the decisions that we have to look at and think about, because it will impact earnings. It will hurt companies. There will be bankruptcies. There will be pain. But folks, we have to get through this together. One thing I can tell you, having been through several nasty recessions, is this too shall pass. Next, if you look at this as your opportunity, you can buy assets on sale. Take care of yourself, build your own family fortress, and then start shopping for assets on sale. That's what this channel is about. Doing the work, networking together, being positive. Yes, I've told you many times, 2023 will be the worst economic year of my life. Macro. You and I don't act in the macro. The macro happens around us. We happen at the micro. Take care of yours. Take care of yours. All right, folks, have an amazing day. Want to let Will know. Will, your Nailed It shirt is going to go in the mail today. You nailed the, what was it, CPI? I think you nailed CPI. So your Nailed It shirt is going out in the mail. I had to order some more, so I just got them in yesterday. Your shirt will go out today. All right, everybody, take care. Bye-bye.